Banking and financial services. Understanding, accessing, and using modern financial systems. Introduction. Money is more than just cash in your pocket, it's a tool for building wealth, achieving goals, and empowering communities. But to use this tool effectively, you need access to reliable financial services. This is where banks, digital finance, and fintech platforms come in. For young people aged 18 to 35, understanding banking and financial services is crucial for managing personal money efficiently, saving and investing for the future, accessing loans and credit responsibly, teaching students in schools how to navigate the financial world. This module will cover how banks and digital finance systems work, steps to open and manage accounts, introduction to mobile money and fintech tools. By the end, you will have the knowledge and practical skills to competently manage money and guide others in financial literacy. Section 1. Understanding banks and their role. 1. What is a bank? A bank is a financial institution that provides safe storage for money and offers services like accepting deposits, providing loans and credit, offering investment opportunities, facilitating digital transactions. Think of a bank as a bridge between where you are and where you want your money to go. Banks safeguard your money, make it grow, and help you access it when needed. 1.2 Types of banks. Commercial banks offer savings, checking accounts, and loans for individuals and businesses. Examples: Barclays, Access Bank, Citibank. Microfinance banks focus on small loans and savings for low-income individuals. Ideal for young entrepreneurs starting businesses. Central banks regulate the banking sector and maintain economic stability, e.g., Federal Reserve, Central Bank of Nigeria. 1.3 Services offered by banks. Banks provide essential services that empower young people. Deposit accounts, savings and current/checking accounts to store money safely. Loans and credit, access to funds for business, education, or emergencies. Digital banking, online platforms for transfers, bill payments, and account monitoring. Investment products, fixed deposits, bonds, and mutual funds to grow wealth. Financial advice, many banks offer guidance on budgeting, saving, and investing. 1.4 Importance of banking for young people. Safety, your money is protected against theft or loss. Growth, interest earned on savings and investment accounts can grow your wealth. Credit history, banks report to credit bureaus, helping you build a credit score. Convenience, digital banking saves time and reduces the need to carry cash. Opportunities, access to loans can help start businesses or pay for education. Section 2. Opening and managing accounts. 2.1 Steps to open a bank account. Opening a bank account is the first step toward financial empowerment. Here's a simplified guide. Choose the right bank. Research fees, minimum balance requirements, accessibility, and digital services. For students or young earners, look for youth-friendly accounts with no minimum balance. Provide required documents. Identification, passport, national ID, driver's license. Proof of address, utility bills, tenancy agreement. Passport-sized photographs, in some cases. Choose the type of account. Savings account, ideal for storing money and earning interest. Current/checking account, useful for regular transactions. Digital-only account, operates primarily through a mobile app or website. Deposit initial amount, some banks require a small opening deposit. Receive banking tools. Debit card for transactions. Online banking login credentials. Mobile banking app access. 2.2 Managing your bank account. Once opened, proper account management is essential. Track transactions, regularly review statements to detect errors or fraud. Avoid overdrafts, spend within your balance to prevent fees. Use alerts, many banks offer SMS/email notifications for deposits and withdrawals. Automate savings, schedule recurring transfers to a savings account. Maintain minimum balance, avoid penalties by keeping required balances. Tip for young people: treat your bank account like a financial partner. Respect the rules and use the tools provided to grow your money. 2. 3. Understanding interest rates. Interest rates are charges on loans or rewards on savings. They can work for you or against you. Savings accounts: banks pay interest on deposits. Example: save $100 at 5% annual interest equals $5 earned in a year. Loan/credit: borrowing comes with interest. Example: borrow $100 at 10% annual interest equals $110 to repay in a year. Key rule: the goal is to earn more from interest than you pay in loans. Section 3: Introduction to Digital Finance. Digital finance has transformed banking, making financial services accessible anytime and anywhere. 3.1 Online Banking. Online banking allows you to check balances instantly, transfer funds between accounts or to others, pay bills, utilities, school fees, subscriptions, monitor spending patterns. 3.2 Mobile Banking. Mobile banking apps are widely used by young people because they are convenient, fast, and secure. Common features include QR code payments, peer-to-peer transfers, savings goals and automated deposits, access to microloans and financial products. 3.3 Fintech Platforms. Fintech, financial technology, startups are reshaping how people save, invest, and borrow. Digital wallets: M-Pesa, PayPal, Cash App. Investment apps: Shaka, Robinhood, Bamboo. Lending platforms provide small loans with lower barriers than traditional banks. Advantages: fast access to money, microsaving options, transparency in transactions. Caution: always research fees, security, and reputation before using digital finance tools. Section 4: Practical Money Management with Banking and Digital Tools. To maximize banking and digital finance, young people should develop habits. Separate accounts for different purposes. One account for daily expenses. One for savings. One for investments or business. Set spending limits. Use budgeting apps to categorize spending. Set alerts for overspending. Automate financial goals. Schedule automatic transfers to savings or investment accounts. Use apps that round up purchases and save the difference. Leverage digital learning tools. Apps often include tutorials for budgeting, investing, and financial literacy. Encourage students to explore these tools as part of coffee clubs. Section 5: Challenges young people face with banking and digital finance. Lack of knowledge: many are unaware of available financial services. Low trust: fear of fraud or misuse prevents some from opening accounts. High fees: bank charges can discourage account use. Technological barriers: limited smartphone access or internet connectivity. Solutions: educate yourself and others about bank and fintech services. Choose trusted institutions with transparent fees. Start small to build confidence. Section 6: School Application: Teaching Banking and Digital Finance. As a Coffee Hub leader teaching financial literacy in schools. Interactive demonstrations show students how to open a bank account using real or simulated forms. Role-playing: assign roles like bank teller, customer, or digital wallet user to simulate transactions. Savings challenges: encourage students to use mock accounts to track deposits and withdrawals. Fintech awareness: teach students about safe mobile money use, digital wallets, and simple investment tools. Case studies and stories. Case 1: a young entrepreneur in Nigeria. Chioma, 24, used a bank savings account to store profits from her small online store. She automated transfers to a separate savings account. Within a year, she saved enough to expand her business without borrowing. Case 2: mobile money for students in Kenya. A school in Nairobi introduced students to M-Pesa for mock saving and payments. Students learned how to deposit, transfer, and track money safely. By the end of the term, students understood the importance of saving and using digital finance responsibly. Conclusion. Banking and financial services are not just tools for adults, they are essential for young people looking to build careers, create wealth, and lead in financial literacy. Understanding how banks operate, how to manage accounts, and how to use digital finance empowers you to secure your money, save and invest for your future, access credit responsibly, teach others, especially students, to do the same. By mastering banking and digital finance, you are not only improving your own financial stability but also creating an effect that can empower communities and raise financially literate generations through coffee clubs.